I'm Paul Single, Managing Director here at City National Rochdale, and welcome to Economic Perspectives. With the federal government having been shut down for 43 days, almost all government economic data was not collected or published. Fortunately, there is data from private entities that was available to help guide the financial markets. Although this data has been around for years, the financial markets and clients paid scant attention to it, instead focusing on the government-issued data. But for the last few weeks, private data has been the only thing the markets have been able to use as a guidepost. Clients have been asking questions about it. So we thought that although government data is starting to be released, it would be a good idea to review a few of the private labor reports. Let's take a look at some of the charts. As a reminder of where the labor market stands, luckily, the September data was released this morning. This chart shows that the unemployment rate is at just 4.4%, indicating a robust labor market. It is within the range of 4 to 4.5%, which is a level that economists consider to represent full employment. This chart shows the monthly change in non-farm payrolls. It's not as exciting. The columns are the monthly change. Due to the volatility of this monthly data, the dark blue line is the average of the past 6 months, which smooths the data out and makes the trends easier to notice. In 2023 and 24, the economy averaged monthly growth above the approximately 150,000 new hires that we recorded before the pandemic. However, this year, hiring has slowed markedly. The trend has been down to less than half that level, to just 59,000 monthly average. The hiring of workers is a confidence issue. Employers will increase their hiring when they're confident about the economic outlook. That appears to be the issue right now. The tepid labor demand is attributed to high levels of economic uncertainty stemming from the trade war, layoff of federal workers, the shortage of available workers in certain professions such as construction, agriculture, and healthcare, and the uncertainty surrounding artificial intelligence. Now we will look at how the government data compares to private sector views. Here, we're looking at the government data from the Bureau of Labor Statistics. The blue columns represent the monthly change in private sector payrolls, so it's not counting the government jobs. The bright blue columns are data from ADP of private sector jobs. So who is ADP? It stands for Automatic Data Processing. They are the largest payroll provider in the United States. The report is based on payroll transaction data for more than 25 million workers across more than 500,000 employers. It represents about 1 in 5 private sector workers. They do not service government workers. That is why we're looking at just private payroll data. The report was launched in 2006 with great fanfare as an early indicator for how the BLS labor report will show. But the report didn't correlate well with the BLS report, so the market didn't pay much attention to it. In 2022, ADP announced that they had retooled the report in partnership with the Stanford Digital Economy Lab. The revamped report generally aligns with the BLS report. Since it's issued a few days before the BLS report, it is used by forecasters to help make their forecast of the BLS report, which is issued on the Friday of that week. The results can vary from month to month due to differences in underlying data and methodology, but the trend is what is important. The lines in this chart are showing the respective 6-month moving average. The ADP data in light blue has generally been a leading indicator of the government data released by the BLS. This is showing that the trend has been cooling. The good news is that last month it showed a little tapering in the downward trend. Hopefully that will continue. Another source of forecasting labor demand comes from small businesses. In this case, the National Federation of Independent Businesses. It has lots of great information. Regarding labor demand, you can see in this chart that the outlook hasn't changed much over the past few years, which is a good sign. Yes, there has been a gradual slowing, which is natural as the economy matures, but it is not falling off a cliff. Looking at the dark blue line at the top, employers are finding qualified applicants for job openings. The bright blue line in the middle is the number of job openings, and the dark gray at the bottom is hiring plans. All of this shows stability in labor demand by small businesses. This is essential data. Small businesses do most of the hiring in this country. This chart shows the number of job openings by company size. Yes, large companies make the news with layoffs, but most of the hiring is happening at smaller companies. We define small businesses as those with fewer than 250 workers. That accounts for 87% of all job openings. This video focused on private sector data on the labor market. It's been shown that the demand for labor continued to grind lower as employers remain concerned about what the future may be like. But the general theme is that there has been some layoffs, but that's been relatively mild compared to the 160 million workers that we have in the United States at this point. With the regular release of economic data coming in the next few weeks, the Fed will have the information it needs to direct monetary policy. That should help lower some of the anxiety that many firms have regarding the future of hiring. But at this stage, the labor market remains strong and should strengthen when that uncertainty subsides. Thank you for watching. I'm Paul Single, and I'll see you next month.